Let's welcome on board Sudip Bandyopadhyay too and find out what he's making of the market right now. Sudip, hi, afternoon. We're at least mesmerized by the move in IT. Did you anticipate such a strong reaction to a largely inline set of numbers from TCS?
Well, I think the reaction definitely is beyond expectation. But Aisha, I think the numbers have been pretty good. It's of course there were expectations being built, but I think it's better than that. Every segment in which they operate, the performance has been better. BFSI, particularly where they have been suffering for a very long time, I think finally they have turned it around. The other interesting thing which I found in the management commentary is that the AI portion, it has scaled up to 1.5 billion from about 800-900 million. I think that's quite interesting because that's the way forward. So that these small things which in isolation may look small, but in totality, I think it does create the picture of a very fast growing opportunity going forward. So yes, under the circumstances, the market is giving it a big thumbs up. And TCS being the largest, I think every other IT stock is also getting influenced by the performance of TCS, and expectations are building around better performance from most of the IT companies.
The word coming in on TCS and a lot of other IT companies, but Oil India is in focus. As we were talking about it earlier, the stock was up almost 5-6%. Now it's shot up to a 12 to 13% gain. Let me take it across to Janay, who's joining us with the commentary coming in from Morgan Stanley on this one.
Well, yes, so Oil India will be in focus as Morgan Stanley has maintained its overweight rating and hiked its target price from rupees 497 to 663, which is their highest ever target price. Now, if you look at some of the factors behind this, then this is gas production, which is being seen doubling and tripling from one of the largest and profitable fuel refineries in Asia. Second is 38 years of hydrocarbon reserve life monetization. And third is 14% CAGR of companies' operating cash flow. Now, apart from this, Morgan Stanley has also highlighted some of the other standout factors, which includes 20% increase in gas ASP over the years, and they also believe that the new well which is being drilled will extend further company's growth. Now, Morgan Stanley believes all of this has happened and still the company is trading at a single-digit multiple. Apart from this, Morgan Stanley believes that the dividend distribution by the company and earnings are set to double by 2029, and that is why we are seeing a hike in the target price.
Okay, thanks Janay for that. But in the meantime, there's a perk up on Zomato as well. Remember that too had got a thumbs up from brokerages this morning. Not a big change, but UBS had upgraded the target price to 260 on that one. That one too has seen a large deal in the last few minutes. And the other one is Indigo. My colleague Somit was pointing out how the delays coming in from Boeing is going to be good news for Indigo, because it's the likes of Air India and SpiceJet which have orders pending with Boeing, while Indigo has orders pending with Airbus, which means there will be lesser competition coming in for Indigo. So that stock is in focus as well. Overall, Sudeep, any thoughts on these urban discretionary names? And I'm talking about the travel and tourism industry. Some of these Indigo kind of names or hotel industry.
Well, I think this entire space is good. Of course, I mean, one has to look at the valuation. The airline industry, particularly Indigo, has been doing phenomenally well. And the way the orders for the aircrafts, as you just outlined, obviously that's advantage Indigo once again. But the valuation also is rich. So I don't think I will recommend a buy in Interglobe Aviation at this level. But I think it's in a good wicket as things stand today. As far as the hospitality sector is concerned, it is again it's a great space now, and things are looking really good. But if I have to pick up few stocks from this entire this travel tourism theme, I will probably go to one of the technology companies and some of the other hotel companies. So as far as hotel companies are concerned, for a long-term investor, Indian Hotel and East India Hotel is good. The valuations are not cheap, but for a long-term investor with about 3 to 5 year horizon, I think these are good buys. As far as technology space of travel tourism, I think RateGain Technologies as well as coforge can definitely be looked at on the back of the excitement in travel and tourism.
Okay, let's get in some BTST trades as well on that note. Kunal, a very strong close to the week. Any BTST ideas?
Voltas is the first stock which I would suggest as a buy. The stock closing almost near to its swing breakout levels, just around the 1485 to 1500 plus levels is the swing breakout. So I would suggest a buy with a target of 1570, stop loss at 1490. And the second would be a buy on Coforge. That stock today is formed an inverted head and shoulder pattern. So if it closes just around the 6000 mark, this could be a completion of this inverted head and shoulder pattern for the stock. Expecting a 300, 350 point up move for Coforge, 6350 as target, and stop us at 5750.
Right, that's Coforge from Kunal. Naresh, what's on your BTST list?
So first would be a buy on Reliance Industries, very close to a new all-time high here. Stop loss at 3190, target price of 32.50. Second would be a buy on Crompton Consumer. The stock has hit a new 52-week high here as well. Stop loss at 432, target price of 445.
Naresh, do a chart check on a couple of these names. Manappuram, which is up 5% right now, and on the losing side, ABB. Of course, it had got a downgrade as well this morning, but that stock is slightly under pressure.
So Manappuram is a very interesting long-term chart. The stock pre-COVID had made a top around 190.95. Then in 2021, the stock made a top around 220.25. Today, the stock has come back to 220.25 levels. And that top in 2021 was hit a couple of times. So it's a 3 to 4 year breakout, as well as finally after 5 years, the stock is again coming back into reckoning and making a new all-time high. So out here, it's a buy at current levels, add more on dips, structurally setting up for a move to 260, 300. So looks promising. ABB on the other end is something which has gone up one way over the last, say, roughly 6 months, stock from 4,500 to 9,000. Giving first indications of a topping out with those 3-4 attempts around that 9,000 mark, not seeing a follow-up. So could slowly and steadily correct towards the 7,500 to 7,000 mark.
Right, that's the take coming in on some of those, liquid names. Want to check in on what some of those shipping names are up to, because they are the ones which were actually holding out very well. Not quite the, case in point being Cochin Shipyard, but Mazgaon, GRSC, all of them have been holding out very well. Of course, today the news from the larger theme has been the fact that Adani has actually opened business at the Kerala port. That stock, of course, is just about marginally in the green right now. But from a long-term perspective, Sudip, how big an opportunity could shipping per se be, and the entire infrastructure also around it?
I think, Aisha, there's absolutely no doubt in my mind that this shipping infrastructure and shipping definitely is a fantastic area to be in. It's one has to be there in for long term. It's not a overnight business, or you start something and you will start reaping benefits tomorrow. It takes a lot of time. Adani is in the right place, and their decision to start manufacturing ships is a good decision. They have the infrastructure, and they have we understand they have the requisite approvals as well. So it makes sense for them, considering the global scenario of the glut, or sorry, not the glut, the demand, huge demand, and the lack of facilities for delivering those ships. So India definitely will attract a lot of orders for ships. So apart from domestic, the international orders also will start pouring in. So it's a great place. Now, the only challenge as far as domestic companies are concerned, particularly the ones like infra companies like Mazgaon Dock, Garden Ridge, is that while they have order book full, they are doing good, their balance sheet is good. The problem is the valuation was a little too full. And, at these kind of valuations, recommending a buy is definitely not recommended. Some amount of profit booking, some amount of correction, if and when that happens, these stocks will be worth buying for long term.
Okay, we'll wait by and see that. But in the meantime, we're also keeping an eye on the sky, because in Mumbai, we woke up to those heavy showers, and then there was the expectation that the next few days it's going to be heavy downpour. We did speak with IMD today to get a sense as to what's the reality on the ground and what we should expect for the next few days. Listen into what they told us.
Expecting more heavy rain tomorrow. That's why we have given orange alert tomorrow. And till morning 8:30, we have received the rainfall at Santa Cruz around 115 mm in 24 hours. And we are expecting the same rainfall intensity in next 24 hours. Forecast for next 4 days, Palghar, Thane, Raigad, Ratnagiri, most of the places we have given the orange alert as well as yellow alert. As on today, we were expecting around 1,000 millimeter rain, and that much rainfall we have already got. And monsoon is progressing very nicely, and there is no deficit as on today for Mumbai.
Right, okay, that's the take coming in on what the forecast from the Met Department has been. But the fact that, the June deficit, Sudip, has been clearly made up, at least so far in July. Wanted to understand what's your stance on the staples and the FMCG plays?
Well, I've been positive for quite some time on this entire, rural consumption and consumption getting boost post the monsoon, and pretty much that's what is happening. We should hope and pray, continue to hope and pray that the spread of monsoon is good. We understand that deficit has got covered, and I'm sure it will get spread well over the country. Now, if that happens, I think the consumption sector will overall get a boost. We are also, must say that we are also expecting some kind of support from government in the budget for consumption. Now, if these things happen, A, monsoon is good, and B, some kind of support from government for consumption, I think we will see a fantastic season for FMCG staples and even consumer durables, including two-wheelers. So I think we need to be careful and selectively start picking up. ITC definitely on a peer comparison basis definitely looks very attractive on a valuation level. So does Dabur and also HUL at some level. So these can be picked up because both Dabur and HUL have a significant skew towards rural India, and they should do well if rural consumption picks up. On the two-wheeler side, I would say Hero MotoCorp, which has a significant rural semi-urban presence, should be looked at on the back of this. We should also look at some of these, TTK Prestige and other consumer durable names, which is, related to typical rural consumption.
Naresh, the two-wheeler pack aside, what about the FMCG trade? Because that didn't quite last long, barring that, I think, election week.
So we've seen structural moves in some of the names. So if you look at Dabur, the stock has again come back all the way to the previous all-time highs made in 2021. You have Marico, which has again come back to the all-time highs. So the structure is positive, but one needs to be cognizant of the fact that they've moved up almost 15-20% from the last 2 months. So in this case, it's a buy on dips. For example, Marico after that move to 660 came back to 600. So you want to be buying on dips, and going forward, HUL could be the one which you could buy on dips because that has made multiple tops around 2,700 over the last 2 years. The next time around, maybe that could break. So on dips, it would be a buy on Hindustan Unilever going forward.
Right. In the meantime, all eyes are also going to be on important macro data, the June CPI and May IIP data for India as well, which are expected to be released shortly. Gaurav is waiting by to tell us what is expected.
Well, yes, India will release its inflation data soon, and when we talk about economists, now their penciling is to remain somewhere around 4.8% growth on a YOY basis for the month of June. What they're expecting is that we have already seen the inflation going to 4.75% in the month of May, which was actually a lowest point in the last 12 months, and now economists do not see any kind of sharp uptick coming up in this number. When we talk about core inflation, that is likely to remain at 3.1%, which is again at a lowest level, but the main concerns are still there when we talk about food inflation, and specifically when we talk about vegetable prices. Let's not forget that food inflation have been higher than 8% since November 2023, and now what they believe is that the increase in heat wave in the month of May and June, which was followed by delay in monsoon in some of the northern regions, could actually weigh in some pressure when we talk about vegetable inflation. When we talk about any kind of inflation easing, now experts expecting that inflation will ease somewhere after September only, because that time we may see fresh kharif crops coming in. Now when we talk about IIP data also, they are expecting this growth to remain somewhere around 5% on a YOY basis, and this would be fourth consecutive month where the growth will be somewhere around 5% if that comes true for the month of May. They also believe that the high frequency indicators suggest mixed trends for the month of May, but they do not see any kind of sharp downtick or any uptick in this data. So overall, we will be watching out on these data points. Definitely we also have budget coming in, but still let's see how these data points pans out for investors.
Okay, thanks Gaurav for that. We will watch out for the CPI and the IIP data. CPI was of course much lower for the United States, and that has put the entire rate cut discussion back to the fore, and that's the reason some of the IT stocks are penciling that in as well, that perhaps the spending will ease from the clients once the rate cut cycle begins, and all of that is auguring well for the IT stocks right now. That's the biggest talking point. The other one is Sterlite Tech, which is up almost 4 to 5%. There's a demerger that they're planning there as well of the global services business. So that stock is in focus on account of that. You also have Tejas Networks doing well, 4% higher. InfoEdge is also higher because remember, after 3 or 4 quarters of decline in terms of headcount, this time around TCS had a positive headcount number and a sizable one at that. Almost 5,250 headcount is what they've added in a matter of 1 quarter, and that means that perhaps the IT hiring has bottomed out. Of course, means very good news for InfoEdge because a large part of their billings comes from the recruitment business, which has IT as their mainstay. So that stock is up 3.5–4% as we speak. On the losing side, as I was pointing out, some of these real estate stocks coming under pressure. Nuresh, Sobha, Lodha, what should one do? Buy the dips or just let it go?
So all these names which have moved up quite a bit are better off to be let go because they've gone up 100%. And at the same time, there are other players which are knocking at resistances. So something like Rustomji, which is Keystone Realtors, has been making the same top around 740 odd levels for the last almost 4–5 months. Then there is a Suntech Realty, which is still at 2018 levels. There is a Kolte Patil, which is still around the same prices where it was a year back. So time to shift from the names like Brigade, Sobha, Prestige, which have moved up a lot, to these names which have underperformed.
Okay, well, it's been quite the magical week. And next week onwards, we're going to be counting down to the budget, which is the week after on Tuesday. So let's hear out what market participants are expecting this time.
I think everybody, including SEBI, Reserve Bank, and the Finance Ministry, is worried about the options and futures volumes. And I won't be surprised if something in that comes which can dampen the volumes and the sentiments in the market. See, I think they have 1 lakh crore extra from the Reserve Bank. I don't think they move from the fiscal deficit target of 5.1. I think they are also committed to 4.5 fiscal deficit for next year. So I'll be very surprised if they make any changes as far as fiscal deficit is concerned. We could see some bit of reduction in taxation for the middle class. There could be some schemes for subsidy or something of that sort.
Realistic expectations on the real GDP growth translating into revenue growth, which will be reasonable. I think FRBM targets and some stiff targets to be set for FY26. For FY25, we are working with 5.8%. I hope this glide path to lower down sharply to around 5.1% in the next 1 year. Impetus on balance sheet expenditure of the government to accelerate infra spending. Middle class, if there was not to be too much of tinkering in direct taxes, that would alleviate a lot of pain, and some additional allowances on the personal income tax, the plus rationalization of GST on a few items.
I think there are 2–3 ways to think about it. Firstly, from a government's ability to do things perspective, I think they're in a very comfortable position. So to that extent, if you look at the last 10 years, there has been a huge focus on infrastructure, on like anything to do with public capex. So that focus, I think, will continue. I think there is room to do a lot on, say rural land and consumption. So I think there is a lot of room to do on this year, for example, given where the government's finances are. So things look pretty comfortable from that side.
Okay, so those are the pre-budget expectations coming in from some of the market participants. We are ending at 24,500 thereabouts. So it's not that we could reach the 24,600 level, but you can't complain much with the kind of rally we've had in this week itself, especially in the IT names. The mid-cap index is ending a bit in the red today. So clearly broader markets giving up a bit, but not the frontline index. There is a bit of pressure as far as some of the broader market names are concerned. But Kunal, any positions that you would recommend people to carry next week, whether at index, bank, Nifty level or individual stocks?
Yeah, I think for the index, for the Nifty, carrying forward long positions could probably be a good bet. But for the Bank Nifty, I think trimming out long positions, it could also be a decent strategy because we've seen weakness coming back into the large cap private sector banking names in HDFC Bank. In fact, in the last 1 hour or so, HDFC Bank has fallen by I think 1.5 to 2%, and that's led to the Bank Nifty slowly and gradually lose the 250 point advantage for itself and then close almost flattish for itself. So I believe that the banking stocks, especially the private sector banking names, are adding a lot of weight for the banking index. So this index may underperform. But then when you have moves like what we saw for the IT index and individual move for individual sectors, that would probably keep the Nifty traders a lot more on the positive side. So maintain long positions on the index, especially on the Nifty.
Okay, and on that note, we'll thank all of our experts for taking the time out and joining in. Kunal, Naresh, Sudeep.
If you like this video, then like, share and subscribe to ET Now.